Welcome, everybody. I know some more people will be joining us as the first 2 or 3 minutes go by, but we're starting at noon, and here we go. I'm Bill Petrovic. This is a SCORE webinar. We're here today with two representatives from the Indiana Department of Revenue, Nancy Tyree and Angelina Hines. Nancy's going to be making the presentation, has a nice deck of slides that will be shared with all of the people who are attending this webinar and even those who are not if they registered. So the slides will be coming to you by the email that you gave us when you registered, as well as a link to a video made of this webinar. And that video will be posted as well on our SCORE YouTube channel, which you can get to and see all our old webinars that we've done since the beginning of 2020 at you go to YouTube and they have a search engine in YouTube and you put Indianapolis SCORE and you'll find the webinars. So this morning's webinar is dealing with Indiana taxes, not federal taxes, but Indiana taxes. And it's designed for people who are new into business or want to refresh themselves on all of the state requirements for taxes. And as mentioned, I'm Bill Petrovic. I am a SCORE mentor. We do these webinars as part of our mission to educate entrepreneurs. And we also mentor. I've noticed a lot of our previous mentees have attended our webinars. We do have a mailing list, and that's how most people find out about our webinars. But we also mentor. If you want to mentor with SCORE, the appointments are obtained by going to our website, which is indianapolis.score.org. So this webinar will be an hour and a half long. We will go till 1:30. And as we go along, please enter questions as you have them into either the Q&A or the chat. I think the Q&A works better for us, but I've noticed in the past that I can't stop the flow of questions one route or the other, but we'll monitor both. So I think we're ready to go. We've got the slides up, and I'll turn it over to Nancy.
All right, that sounds good. Thank you, Bill. Yes, as he said, please feel free to type any questions you have in the Q&A. So hi, everybody. My name is Nancy Tyree. I am the Business Outreach and Education Manager with the Indiana Department of Revenue. And so today we're going to be covering state tax obligations for businesses. We know that if you're starting a business here, you are probably very passionate about your products or your services or your customers and not really very passionate at all about paying taxes. That tends to be how it works. So we want to help you fill that gap. Whatever information you lack, we want to make sure that you get some of it. So as we go through the slides today, please feel free at any point to type questions in the Q&A feature. You can use the chat, but I think it's a lot easier to manage the questions as they come in if you use the Q&A feature. It's at the bottom of your screen, probably. I have today with me a guest from our office who's graciously offered to help answer those questions as they come in. That's Angelina Hines, who is an auditor from our Indianapolis office. She's really knowledgeable about tax issues for new and small businesses and a lot of subjects that you might encounter. And also, we're probably going to have some time at the end of the presentation. So at that time, we might take a couple of questions there as well. So Bill, do you have anything else to add?
Nope, we're ready. It looks good.
All right, cool. Let's go ahead and get started. So the goal for today is to provide some general information. Just to let you know, I'm not really supposed to give general or specific tax advice. So you can feel free to ask questions and we will answer them to the best of our abilities. But, you know, without the full context of your situation, sometimes it is hard for us to give a nuanced answer. So basically, if we provide you with an answer, do not assume that that is the final legally approved answer that is correct for your business. That's why we like to say we're not really supposed to give tax advice like that. Also, the information that we're going to be covering today is accurate to the best of our abilities, but things do change. So if later on down the line, you're looking back at these slides, keep that in mind. At the end of the presentation, we're going to talk about some of the best ways that you can find information and stay up to date, just in case any of these things do change, so that you are always working with the most accurate information. So if you are watching this presentation right now, then you are probably planning or in the process of starting a small business, which is fantastic. Small businesses in Indiana make up a really significant amount of the overall sales and withholding revenue that's generated in the state and directed towards the state. So you are part of the machine that keeps Indiana running. And it's important that you understand your role in that process. Today, we're going to be going over a couple of things. We'll talk about what the Department of Revenue is, different business structures that your business might take on, how to register your business, a brief overview of some tax types that you're most likely to be involved with, how to file and pay those taxes, and then at the end, we'll give you a couple of useful resources. So along with this presentation, we also recommend that you check out the Indiana Tax Handbook for new and small business owners, which gives more information about the topics that we'll be covering today. I've included the URL for that handbook on this slide. And Bill mentioned earlier that the slides should be arriving in your inbox after this presentation, I think, if they aren't already there. So please don't feel like you have to quickly write anything down. You will get the slides. So business owners interact with a lot of different organizations at the state and federal level, some government, some non-government, and it's kind of easy to get confused about what all of this do. We just wanted to give you a little primer on that. So the Indiana Department of Revenue, which we sometimes call DOR because we love a good acronym, it is the revenue and tax agency for the state of Indiana. So we handle different types of income and trust taxes, and we help direct money that we collect to other agencies. So that being said, business taxes can be handled by more than just us. As I think you understand, federal taxes, those are always going to be dealt with by the IRS while we handle state. But even your state taxes, those might not be entirely us, right? Property taxes tend to be handled by your local government. State unemployment tax, that is handled by the Department of Workforce Development. So those are just two big examples. If you have questions about those topics, I would recommend you go to those sources, to your local government, your Department of Workforce Development, the IRS. They are going to be the experts on those areas. So now that we've talked about some things we don't do, let's discuss what we actually do. The Indiana Department of Revenue is a really big state agency. We have around 700 employees, and they are located all around the state. We have 12 district offices throughout the state. So no matter where you're located, there is a district office with employees that can help you near you. Some people prefer to, even if they're just picking up the phone and calling to ask a question, to call their local district office because they might know the people who work there. And it's nice when you have that kind of relationship with them. We administer a lot of tax types, 65 in total, I think is the number right now, changes a little each year. And we handle correspondence and phone calls from hundreds of thousands of Hoosiers. We do a lot here, but who we are is another part of that story. So over the last couple of years, I'd say, we've worked really hard to improve our systems and our services and the whole culture of our organization. We are a lot more customer service oriented. So we think that our job is not actually to collect taxes. It is to support taxpayers. We want to help make sure that you are doing what you need, collecting and remitting in the correct amounts. Because the more knowledgeable you are, the more you feel that you can put those rules into practice correctly. Frankly, the easier our job is. We have to do less collecting and auditing. So that's why we like to work with small businesses and make sure they know what they're doing. But enough about us, let's talk about you. So the first thing we're going to discuss is how to set up your business and decide what your business structure is. Off the top, I want to just preface this by saying it can be a kind of complicated decision if you haven't investigated this yet. We recommend enlisting the help of an expert early in the business formation process, especially if you're questioning what structure is right for you. That's one of those things, it's a fantastic question, not necessarily something that we could easily address for you. But there are lots of people who can. And having someone you could ask that kind of question or who could check over your work at the start of the business formation process, that can really save you a lot of time and money in the long run. So that's why we recommend it. That could be an accountant or a CPA or a lawyer or something that you hire, but it does not have to be. Your local SCORE chapter, for example, our host today, the Indianapolis SCORE chapter is a fantastic resource, as I'm sure you're all very well aware. And there are other organizations that offer free or low-cost services to small businesses, things like the ISBDC, the SBA, maybe your local Chamber of Commerce. So if you have questions about that, consider leaning on those organizations. They are there to help you. So with that little preface out of the way, the business structures we'll be talking about today are not the only ones out there. These are just some of the most common ones for small businesses. And the reason you want to start with this is because your business structure determines a lot of things. It determines your liability exposure, the amount of taxes you have to pay, how much control over the organization you have, many things like that. All right, so the first two structures we're going to talk about, these are considered informal associations. Really, the big thing that means is that you are not required to register with the Secretary of State when you form them. So it is not a value statement. An informal association is not better or worse than a formal association. It's kind of just one less hoop you have to jump through at the outset. We'll talk more about how to register with the Secretary of State in the next section. So sole proprietorship is one person who conducts business for profit. The sole owner assumes complete responsibility for all liabilities and debts of the business. And in this kind of business structure, the income of the business is reported as part of the owner's personal income. Because of that, it's really important to keep track of business expenses and make sure you are accurately reporting those on your individual tax return. So even if you file electronically, as a lot of people do, your individual tax return is usually the IT-40 in the state of Indiana. It might be the IT-40 PNR if you're a part-year non-resident. But that is where you will report business income if you are a sole proprietorship. Because you're reporting your business income and your personal things, you got to make sure you know how that money is categorized. So Maybe you want to keep separate bank accounts or personal and business records, anything that helps you delineate that. A general partnership is really similar to a sole proprietorship, but it just has more people involved. It is defined as 2 or more individuals who are co-owners of a for-profit business. So here, all partners, again, are responsible for the liabilities and debts of the business, and income is reported on each partner's personal income. So now let's look at corporations. C corporations, those are often just called corporations, kind of interchangeable terms. These are legal entities that are created by registering with the Secretary of State. So you'll go there, you will file articles of incorporation, and with a corporation, that entity is responsible for all of the liabilities and debts. That means the shareholders, who are the owners of the C corporation, they are protected from that corporation's liabilities and debts. Interesting thing about C corporation, they are taxed twice. Once at the corporate level, and then once at the employee level when the wage is paid, or the shareholder level when it's distributed as dividend. So a C corporation might be something you find nice because you're protected from those liabilities and debts, but it could be that the income is taxed twice, so maybe that's not as attractive for all businesses. An S corporation is very similar to C corporations in some ways, and then very different in others. So generally, all corporations are going to start as C corporations. And then if you meet certain criteria, you could elect to become an S corporation. So after you register with the Secretary of State, if you wanted to seek out S corporation status, you would go to the IRS and you would register to obtain that status. Now, in order to do that, you would have to meet certain criteria. The IRS lists all of that information if you're interested on their website. But one thing we wanted to point out is that you can't have more than 100 shareholders. There are also some rules about the residency of those shareholders. Maybe not a huge issue for every small business, but something that you might want to consider. And here you'll notice that for an S corporation, income is only taxed once at the employee or the shareholder level. But otherwise, it is pretty similar to a C corp. It's owned by the shareholders, and the corporation assumes all liabilities and debts, with the shareholders being protected from them. An LLC, this can get kind of complicated. So an LLC is owned by members, and those members, like with your C and S corporations, are protected from the LLC's liabilities and debts. What's interesting about LLCs is they can actually elect how they want to be taxed. So if you are a single member LLC, you're probably going to default to being disregarded, and the income expenses roll up into the single member. But if you are a multi-member LLC, those default to partnership reporting usually, but either a single member or a multi-member LLC could elect to be taxed as a corporation, so they're taxed twice. And then that corporation could elect S corporation status if it meets those criteria we talked about before. So then it would only be taxed once. So as you can see, LLCs have a lot of flexibility, but it is complicated. So if you're interested in starting an LLC, I would make sure you are aware of what you are trying to achieve and that you're going through the proper channels to make sure that you do that. But if you do understand those nuances, that flexibility might be really appealing to you. And then a nonprofit, pretty self-explanatory. If you're looking to start a nonprofit, you are probably not concerned about which business structure you need to choose. So if you're engaging in activities that don't financially benefit the members of the organization, that's a nonprofit. Nonprofits will need to do one extra thing. You're going to want to obtain tax exempt status. So you will do that with the IRS. You'll fill out some forms, and then you will also register with the Indiana Department of Revenue. And in doing so, you can be free from certain tax obligations. So I believe at our level, you would have to fill out Form NP20A. It's a nonprofit application for sales tax exemption. And that's actually available on one of our e-portals, InTime. We'll talk about InTime towards the end of the presentation. Okay, so those were the business structures that we covered. Once you've decided what you want to pursue, you are ready to register your business. You'll do that at the state and the federal levels. So at the state or at the federal level, when you are registering your business with the IRS, the result of that will be that you'll be assigned a federal employer identification number, an FEIN. So that's really important. That number is what identifies your business to the IRS and to your as a unique business. You'll use it on a lot of forms that you fill out. Sometimes an FEIN is called just an EIN. Please make sure that if you are applying for an FEIN, you do it directly with the IRS. I put the IRS's website on here. It's just irs.gov, but do not use a third-party site to do this. There are .com and .org websites out there that will claim to register your business for you with the IRS, and they will charge you a fee to do that. You are best off avoiding those. You can do it for and avoid that fee by going through the IRS directly. So under federal guidelines, while a lot of businesses are going to have an FEIN, not all of them are required to register for one. You only need an FEIN at the federal level if you have employees, you have a qualified retirement plan, you operate your business as a corporation or partnership, or you file employment taxes or excise taxes. So you might notice that, for example, a sole proprietorship or maybe a single member LLC with no employees who doesn't meet those other definitions, they might not need an FEIN. If that is the case, then whenever you encounter a form or something else that requests your FEIN, you will want to put your social security number or your tax identification number if you have one. So that is a simple thing to do. It's not usually an issue, but some people don't like giving out their social security numbers like that. So even if you are not required to get an FEIN with your business, you might still elect to apply for one anyway. That is okay. If you have questions about that process, I'd recommend going to the IRS website, typing FEIN in the search box, and it will give you a lot of good information, walk you through that process. So at the state level, you're going to need to register with a couple of agencies. Thankfully, you can take care of a lot of those things in one place. So there is a website called InBiz, started in 2016, and it is meant to be kind of a single point of contact for anybody who is registering their business with the state of Indiana. We recommend using it. It's just the best way to get your business started. You can use InBiz to register your business with the Secretary of State if you are a formal association, with the Indiana Department of Workforce, with the Indiana Department of Workforce Development, if you have employees, and with us if you need to register for any state taxes. So you can do all of those in one place on InBiz. Also, we do want to say there are a couple of things you probably can't do on InBiz that your business might need to get set up with. For example, We'd recommend you check with your city and county governments. Make sure that you are complying with any local regulations like permitting and zoning regulations. I do not believe you can do those kind of things on InBiz because those are more local level, but InBiz can take care of a lot of the big state level things. So when it comes to registering for taxes, these are the most common tax types that a new business might need to register for, and they are all available on InBiz. There are also additional taxes that you can register for on InBiz. I'm just not going to get into all of them because some of them are very specific and probably won't apply to any of you. So there are just a handful of special tax types that might require you to register directly with us, the Indiana Department of Revenue, instead of going through InBiz. I will mention some of those later in the presentation. So if any of those apply to you, just give us a call and we can get you set up. So let's talk about what you can do on InBiz. You can, if you are going to be selling a product, register for sales tax. If you have any employees, you'll be registering for withholding tax. And then there are two interesting taxes that do not apply statewide, but only in certain counties and maybe municipalities, like certain cities in Indiana. So those are food and beverage tax and county innkeeper's tax. So if you sell food and beverages, or you provide short-term lodging, you may need to register for those depending on where your business is located. The nice thing about InBiz is it will ask where your business is located as you are filling out this information. So if you are located in a place that charges or that would require you to collect and remit food and beverage tax, and your business does that, you sell food and beverages, InBiz will let you know, hey, you also have to register for this. So if that applies to you, it should not come as a surprise, which is nice. We'll talk more about those two taxes a little more later in the presentation. For now, do be aware that if you're conducting any taxable sales, you need to obtain a registered retail merchant certificate. Thankfully, you will get that automatically, basically, when you register through InBiz. If you register to collect and remit sales tax, you will go through that process. We will approve your information, and we will send you that RRMC, that Registered Retail Merchant Certificate. That is what allows you to conduct those taxable sales in Indiana. The nice thing is you don't have to do anything in particular in order for that to renew itself. As long as you are filing and paying your returns on time, your RRMC will automatically renew every 2 years. So that's a requirement, but as long as you stay up to date with your taxes, shouldn't be anything you have to worry about. And then one last thing I wanted to cover before we move on. There are actually some businesses that may not need to register to collect any taxes in Indiana. So for example, if you are a sole proprietorship, you have no employees, you don't sell food or beverages or rent anything, and the business that you have is primarily based on providing a service. Say maybe you are tailoring clothing and you do not sell any products. You don't sell sewing machines in your store or anything like that. In Indiana, generally speaking, we charge sales tax. We want you to collect sales tax on products, not services. So that tailor that I gave as an example would not have to register for sales tax. They would not have to collect and remit sales tax on the items of clothing that they tailor. So that business owner would just report their income from their services on their individual income tax return. I don't know if that kind of thing applies to anybody who's in the audience today, but I wanted to mention it just in case it did. And that is an area that can get a little nuanced. There is some discussion about what is considered a service versus what is considered a product. It's especially true if you're offering any digital products, I've found. We have very specific rules about that. So let us know if you have questions about that, but to be perfectly frank, it can get so in the weeds that I won't have time to cover it in this presentation, but we can address questions if you have them. Okay, so let's also talk about a couple of the different tax types that you'll be dealing with in more depth. Depending on the nature of your business, you might need to file several different types of taxes. So we're going to be covering some of the most common ones small businesses could be dealing with. Before we really get into it, I want to make sure you know what types of forms you're required to file. So the type of income tax form that your business files is going to depend on how you are structured. So you'll look at that left column, see what your business structure is, and then just look to the right. And the tax forms listed there are what you'll need to file. If you want to look at those tax forms and see what's on there, you can do so by visiting our website. In the upper right-hand corner of this slide, I've included the URL for where you can find all of the current year tax forms on our website. And if you see anything that says IT40 and then maybe some letters next to it, that is your individual tax form. So you will find those in the individual income section of that website. And if you see anything else, the IT65, the IT20, the IT20S, the IT20NP, or the NP20, those are all corporate forms. So you can find those by going to the corporate income section. And as you'll notice, a lot of the structures on here file both, they report business income both on the individual forms and on those corporate forms. Not all of them, it depends on the structure, but that is how you report tax. You're going to be doing it in multiple places. And even if you report, you always pay your taxes online, you use one of the many online services to do that, you're basically just using the electronic versions of these forms. So it might benefit you to look these forms up and see what kind of information it's asking for. So that way, when you do collect and remit it, you're prepared to report what's needed. Just briefly, like I said, individual income is a thing that you might have to report your business income on. I think everything but a nonprofit would be required to report their business income on their IT40. So as we mentioned in the business structure, most business income is taxed on that individual level. That means business income must be reported and taxed on the personal tax return of the business owner or any individual member, partner, or shareholder, if that's what your structure has. So whether you file a federal income tax return, that is going to depend on your gross income, your filing status, your age, a lot of other things like that. There are some people who do not need to report. They don't owe federal tax, but even if that is the case, you're still required to file a return that reports your income. And then you must also file an Indiana individual income tax return if you lived in Indiana and received income greater than most of your exemptions, or if you lived outside of Indiana and you received income for work that was sourced to Indiana. So I'm guessing what that means, the takeaway is that for most of you, you will be required to report your individual income tax at the federal and state level. But it's useful to know in case you fall into kind of a gray area. I also wanted to provide a little bit of a vocab lesson. So we have a term at the Indiana Department of Revenue that I don't think is used very widely outside of our agency. It's called trust taxes. So that includes things like withholding, sales tax, county innkeeper's tax, food and beverage tax, motor vehicle rental, excise taxes, and a lot of other taxes. What it means is that if you're collecting trust taxes, you actually become an authorized agent for the state of Indiana. You collect taxes for the state, and then you report and pay those taxes to us. It's a legal condition that you need to fulfill in order to operate a business in Indiana. And so that's kind of why we think of small businesses as like our partners in collecting taxes, because it's what you do. So if I mention trust taxes, please know I'm talking about those kind of taxes where you are collecting them from most likely a customer or an employee or something like that. You're holding it in trust, and then you are remitting it back to us later. So let's talk a little more in depth about one of those types of taxes. We'll start with withholding tax. Keep in mind, this is for those who will have employees. If you have employees who are working with you, working for you, you'll need to collect income withholding tax. So those are state and county taxes withheld from your employees' wages in trust and then submitted to us. Withholding agents are employers who are required by the IRS and the state to withhold income tax on salaries, wages, tips, fees, bonuses, and commissions. And then you are also required to pay withholding periodically. So if you need to report and pay withholding tax, you'll do it through, most likely you'll do it through InTime, which we'll talk about later in the presentation. And then if you want more information about this, the handbook that I mentioned earlier on, it explains a lot about how filing structures work, how filing frequencies work. Here's like a really simple overview. The amount that you need to file withholding taxes, the frequency, that is based on your monthly average tax withheld. So if you're only withholding 83 and some change dollars each month, you only need to file your withholding tax every year. You file annually. If it is more than that, you are going to be filing monthly. And depending on how much more it is, that will determine the day of the month, basically, that you file. We have regular monthly filers and early monthly filers. That just means you have to submit it at an earlier period in the month. And then there are a couple of forms that you'll need to be aware of if you're dealing with withholding tax. Today, we want to focus on the WH-4. It's one of the most important forms because it kind of determines a lot of other things. So the WH-4 is the form that employers get from employees. And those employees on that form, they list the number of exemptions that they're claiming. And they also tell you the county of residence that they were in on January 1st. That is really important for employers to know because you need to know which county tax rate to apply to your employees' wages. We'll talk about this more on the next slide, but every county has a different tax rate. And if you don't get it right, you might not be withholding the correct amount throughout the year. And so when your employee goes to file their taxes and they enter what county they live in, and maybe it doesn't match your records, they won't be happy if they end up owing because of that error. So that is something to keep in mind. You might want to update the WH-4 if you're aware that your employees have moved to a new county or something like that. So a little bit more about county income tax. This is required in every county, and the rate varies from one county to another. What the employer is responsible to withhold and what the employee will report, it depends on where that employee resided on January 1st of that year. So it can get a little complicated knowing all those different rates, knowing the rules about withholding. Sometimes those county rates change. So we have a very helpful document on our website. It is called Departmental Notice Number 1. It is updated every time county taxes those county withholding rates can potentially change. So it is always up to date, and it has those rates listed, and it also explains more about how to withhold taxes to make sure you are doing it correctly. So if you want to learn more, I would highly recommend seeking out that departmental notice. All right, let's also talk about sales tax. So this is the big one. If you sell goods, tangible personal property, or if you rent accommodations, you need to register to collect Indiana's 7% sales tax. We mentioned earlier that generally speaking, services are not taxed in Indiana. So if you engage in retail sales, and this would be true whether you do it or whether you do it through an agent or a salesperson or someone who represents your business, you need to register to be an Indiana retail merchant, and you need to collect sales tax for the state. Registering to become an Indiana retail merchant just means registering for Indiana sales tax. In Indiana, this might be helpful for you to think of. All sales are taxed unless there is a specific exemption for that tangible personal property or accommodation. What does that mean? So you might be aware that there are these things called exemptions. There are some things that you don't have to collect sales tax on, correct? But the way that our state tax law is written, it says basically that all retail transactions are subject to sales tax unless there is a specific exemption. So you should go in with the default assumption that what you're selling, you're probably going to need to collect sales tax on it and remit it back to us. Exemptions will come into play if an item is exempt according to code, or if a customer has an exemption certificate, which we'll talk about more on the next slide. So for now, I want to mention a couple of things that are exempt according to state code. That could include prescription drugs, newspapers, items that are purchased with food stamps from the customer, lottery tickets, postage stamps, and gift cards. Those are things that are all basically automatically exempt. Additionally, sales of food can be exempt. It depends on the food. So some foods are subject to sales tax, others are not. In general, anything that's meant to be consumed on the premises or immediately after, like food sold by a restaurant, even if it's for carryout, that would be subject to tax. You're charged sales tax when you go to a restaurant, right? But there is some food that is exempt. Food and food ingredients are exempt if they are sold in an unheated state, and they're sold by weight or volume as single items, and they're sold without utensils. So an example of that might be a package of chips or a whole piece of fruit, like an apple or something like that. You should not charge sales tax on those food items. So that might sound like kind of a weird distinction. I don't think it's necessarily obvious when you're looking at a food whether it should be subject to tax or whether it should be exempt. And presumably you wouldn't think that's obvious either. Thankfully, we have another useful document on our website that spells out those rules about food and whether you should tax them or not. It is Sales Tax Information Bulletin number 29, which I have linked to on this slide. And then the last thing I wanted to cover, so items purchased for resale or inventory, those are not subject to tax. Those are exempt. What does that mean? So think of it like this. We mostly want to collect sales tax when that tangible personal property is being sold to the end user. So if you're a store owner and you're purchasing something and you intend to resell it to your customer, you shouldn't have to pay sales tax on that item. Instead, and the reason for that is because you're going to charge sales tax on that item when you sell it to the final customer. You'll get that sales tax from them, and then you will remit it to us. So if you are purchasing something in the course of your business that you are then going to resell to a customer, you're going to use it as inventory, that will be exempt, most likely. And in order to show that you're buying it as inventory and that it should be exempt, you'll use something called an exemption certificate, which we will talk about now. So whether it's inventory or something else in the state of Indiana, an exemption certificate is usually going to show, hey, I'm giving this to you because I shouldn't have to pay sales tax on this item. If you get one of those certificates in Indiana, it's usually going to be the ST-105, which is a general use certificate. Then that is your signal that you don't have to charge sales tax on that thing. So aside from inventory, there are other reasons someone might use this. There are certain groups or people who are exempt from sales tax just by nature of their business when they buy. So they give an exemption certificate in order to show that. So that could include nonprofit entities, federal, state, or local government agencies, or public transportation services providers. Usually that would only apply if they are buying something for the purpose of their organization. You know, a nonprofit entity shouldn't come in and try to buy something for the owner's personal use and claim that it's exempt, right? But anyway, if a customer comes in and they give you a valid, completed exemption certificate, it's signed, they've checked all the fields that they need to, then that means you do not charge sales tax on the item that you sell them. You should, however, keep a copy of that form for your records, because that proves that it was a valid exempt sale, just in case you're ever audited down the line or something like that. The ST-105, it can be used for a lot of things. If you're curious about the different exemptions that this could be used for, the form actually lists all of them, I believe on the back or on a certain section of the front. So if you want to, you can go to our website and find the ST-105 and you can see those lists of exemptions. There are a couple of oddball things about this. For example, you can't use this form to purchase a motor vehicle. There is a separate exemption certificate for cars and boats and things like that. But anyway, here is the big takeaway before we move on from sales tax and exemptions. If you collect tax on an item, you're probably good. You're probably in the clear. If you don't collect tax because you think something's exempt, but you don't have a valid exemption certificate, or you don't know for sure, you're just assuming that it's fine, that can be a problem, right? Because if you don't collect tax on something and it turns out you should have, we're not going to go track down the customer who should have paid that tax. It's going to come from your own pocket if you ever get audited or get sent a bill from us. And we don't want you to be in that situation. So that's why it's really important to know those rules about what items are exempt according to state code, and to keep those exemption certificates if a customer gives you one. Keep good records. That's what will cover your bet. One or two last things before we move on from sales tax. It needs to be separately stated from the marked price. It needs to be shown on the receipt or invoice for the purchase. And that's probably pretty obvious. If you've looked at a receipt from something that you've bought, you've probably noticed that the sales tax is listed separately on that receipt. Also, as I said before, keep records, not just of those exemption certificates, but of all sales invoices and any other documents that you have that can verify the correct amount of sales was collected by you and remitted to us. So we've talked a lot about sales tax. I'd say most people maybe don't understand all the nuances of it, but they know what sales tax is. What we're going to talk about next is not something that the average person is quite as familiar with. So this is called use tax. It is the complement or the other half of sales tax. The idea behind use tax is if a seller does not collect tax from the person purchasing the product, but that purchase is otherwise taxable, then the purchaser is responsible for remitting use tax to the state. Use tax is a 7% tax. So because of that, hopefully it is easy to, because it's the same as sales tax, it's easy to say, oh, I owe this. Here's what I would have paid in sales tax. So giving that definition does not necessarily explain how you implement use tax. Let me give you a couple of examples. Hopefully that will help you understand it a little more. So if you purchase something that when you purchase it, that item was exempt, but then later on down the line, the exempt purpose no longer applies, then you might have to pay use tax. So a good example would be if you are an office supply store and you are buying a ream of paper as inventory. You are going to sell that paper to your customers in your office supply store. But then, maybe a month later, you still haven't sold it. Your copier in your back office runs out of paper and you don't have any other. So you say, that's okay. I'll take that ream of paper from inventory and I'll use that in my copy machine. I'll just reclassify it. That'll be fine. Yeah, that probably will be fine. You can do that. There is one problem though. If you knew that you were going to use that paper for your business rather than sell it, when you bought it, you would not have been able to claim an exemption because you wouldn't have been purchasing it for inventory. You'd have been purchasing it for your business. That means you would have paid sales tax if you had known what you were using it for originally. Well, now we need to make that right because you didn't do it at the time. Through no fault of your own, you didn't know. Here's how you make it right though. You are going to remit use tax to Indiana. So you'll take the price of that ream of paper that you bought it at. You will figure out what 7% sales tax would have been, and you will remit that to us as a use tax. And you can do that online through our e-portal if you need to. You can do it along with whenever you remit sales tax to us, or you could also just do it whenever an instance like that occurs. We let you do it either way. Use tax might also be owed if you purchase from a vendor. Specifically, we see this happening with out-of-state vendors a lot. A lot of out-of-state vendors are not registered to collect Indiana sales tax. So even if they are selling to somebody in Indiana, they're not registered with us. They're in Ohio or Kentucky or whatever. So that means they might not charge you sales tax on that. So if you don't see 7% sales tax on that out-of-state sale, and you know that that item is otherwise not exempt, that means you need to pay use tax to us. Oh, I skipped ahead quite a bit. Sorry. There we go. Okay. Oh, okay. I did not skip ahead too much. I was just done talking about use tax. Forgive me. So those are just two of the most common examples why you might need to remit use tax. If you have more questions about that, like I said, the handbook is a really useful primer on use tax, common situations you might need to remit it in, and how to do so. Okay, so I also wanted to touch on those two taxes that only apply to certain counties and municipalities. So one is food and beverage tax. We call this sometimes FAB or FAB. I'm not sure what the preferred nomenclature is because I've heard our auditors call it both of those things. But this is in addition to sales tax. So if you sell food and beverage, you will, in one of these counties, you will charge that 7% sales tax and that additional food and beverage tax. So in certain counties and municipalities, if you sell food or beverages, you are required to register for, collect, and remit this thing known as food and beverage tax. The rates vary a little depending on the county and municipality. It's usually a 1 or 2% tax, is my understanding. And taxable transactions, again, like with sales tax, don't involve all food. But we list on our website, we have a very useful guide that lists what kinds of food you should be looking at that you would be required to charge FAB tax on. So that can include food sold and served by caterers, food cooked on the premises and sold at a deli counter, and any transactions where the seller provides utensils like plates, forks, glasses, cups, napkins, straws, things like that. And then also be aware, for most counties and municipalities, we administer the tax. What that means is when you are registering your business on InBiz, you will register for this tax there, and then you will file and pay this tax with us, perhaps through our online e-portal, which I'll mention in just a little bit. But there are just 1 or 2 municipalities or counties that have elected to administer this tax themselves. So in those cases, you actually would file and pay the taxes directly with that local government entity. I believe that InBiz will notify you if you're located in one of those areas so that you know you're supposed to file with your local government rather than with us. Additionally, like I said, our website, I have linked on this page, the page of our website that has more information about food and beverage tax. That lists a lot of things out. It links to other resources that have more information on different rates, different rules with counties, what types of foods apply to this. And it also has a helpful business guide that you could print off and look at your leisure. So I'd recommend checking those out if you have more questions about food and beverage tax. Some counties also require a tax on the rental of rooms and accommodations. So this is really similar to food and beverage tax. It's just for a different thing. And these are for short-term rentals, less than 30 days. This is called County Innkeeper's Tax, or CIT. In this case, you might have to charge CIT if you rent for 30 days or less, rooms in hotels or motels, or even houses or vacation homes or something like that. Or if you rent something like a gymnasium, a banquet hall, a cabin, a trailer, space in a camper park, anything like that that's regularly offered for rent. Like I said before, CIT doesn't apply when you're doing long-term rentals for more than 30 days. Some counties also have a couple of specific rules, like maybe a minimum room threshold. So if you want more information about those rules, I've listed here our business guide for County Innkeeper's Tax. That has more information. And it also links to other pages on our website and other resources that we provide. Also, kind of similar to food and beverage tax, there are some counties that administer this themselves and some that go through us to do it. The thing that's different than food and beverage tax is that while we handle it for most locations, with county innkeeper's tax, most counties actually do it themselves. So for a good chunk of counties, you are going to be going through your local government in order to remit this tax. And then there are just a couple that we handle. So you would go through us to remit it instead. That guide that I linked to on this slide, that has more information of where you can find a list of those counties. So I'd check that out. And then those were just some of the most common types of taxes you'll probably be dealing with. It was not a full list of every tax a business might possibly need to collect and remit. Like I said, we have maybe 65 different taxes, so it can get pretty lengthy. I will say there are a lot of taxes that we deal with that a business realistically is going to have nothing to do with, or that realistically very few businesses are going to be involved with. So you don't need to necessarily know what all those 65 taxes are. But I did want to, aside from what we've already covered, list a couple more things that are more common with businesses that you might want to look at. Just looking at this list, if you think, oh, that would definitely apply to me. I would sell alcohol at my restaurant. I should look at the alcohol beverage excise tax, for example. That's the intention behind this. So the first three things that I've listed here on these bullet points, those are taxes you can register for through InBiz. Everything else you register directly with us. So if you need to do that, I would look at the handbook that I mentioned earlier in the presentation. We have a section on all of these taxes and licenses in that handbook that details how you get registered, what forms you need, and how to remit those taxes to us. So if you're looking at this and you're thinking that might apply to me, check out the handbook. There are also a couple of fees that you might need to register for to collect and remit. For example, consumer fireworks, very surprisingly popular. There are a lot of businesses that sell fireworks in Indiana. You would need to register with the state fire marshal if you were doing that, but then you would automatically be registered with us after that. We'd send you the form and you would be able to remit that fee. The other two listed on this slide, the tire fee and prepaid wireless fee, those you can do through InBiz, and then you can file and pay them directly with us. And I also listed on this slide a URL that is a page on our website that has all of our special fees and penalties and some other information on there if you're interested. Okay, so now that we've given you an overview of some of those most common taxes for businesses, let's talk about how to file and pay them. Just wanted to preface, if you don't want to do this yourself, if you want to hire a CPA, or maybe you want to do that on a one-time basis because you want a professional to help you with something. If you want to authorize someone to represent you and to file and pay on your behalf, or to talk to us on your behalf about your tax records, you can do that, but you need to give them formal power of attorney. So you do that by completing the POA1 form that I listed on here, where you can find that on our website. Or if you have an in-time account, you can do that entirely online with an ePOA. So whether it's a POA1 form or an ePOA, those are virtually the same thing. The only real difference is how you submit it to us. But those will allow you to grant someone else the authority to represent you in that way. Without a POA, we cannot speak to another person about your tax account on your behalf, and that's because of privacy concerns. So if you want somebody to talk to us or to want somebody to file and pay on your behalf, you're probably going to need to give them power of attorney. That being said, you don't have to do that. You can absolutely file and pay your taxes yourself. So let's talk about how to do that. As we mentioned earlier in the presentation, when we were talking about withholding, the amount that you owe determines how often you file and pay, your filing frequency. And that is true for withholding. It is also true for other trust taxes. So the link on this slide gives a list of different due dates for different tax types throughout the year. I would recommend checking that out if you want information about how often you should be filing different things, what dates to expect. Also, filing frequency, you may file your sales tax annually or monthly, just like with withholding tax. How often you file, that can change over the course of your business. If your business starts small and you're not remitting a great deal to us, you're probably going to be filing annually. If you grow and you remit more, you might have to start filing monthly. If that happens, if we review your accounts and determine you need to start filing monthly now, you will be notified by a letter in December. So it will not come as a shock if that happens. You will be notified. We won't expect you to just start doing it automatically without any warning. Also, please be aware, you are required to report and pay your taxes every filing period. So if you pay annually, you do it every year. If you're required to do it monthly, you need to do it every month. That might sound obvious, but there is a situation where we find that people have maybe not a clear understanding of how that works. There are some businesses that are seasonal or that temporarily shut down. We saw that last thing happen a lot last year in the height of the pandemic. Restaurants, for example, that shut down for a couple of months and then came back later on in the year. So if those businesses are required to remit, say, on a monthly basis, there might be periods of time where they didn't collect any sales tax. They didn't collect any tax at all that they have to remit to us. So some of those businesses, sometimes they just don't file during those periods, but that is a problem. You need to file every period, even if you are not going to remit any money to us. All you do is you file a $0 return. That's what we call it. That's just your way of saying, didn't collect anything, don't have anything to remit to you, but I'm checking the box and fulfilling this obligation. If you do that, you should be good. If you do not do that, then we might send you an estimated bill for that period because we think, oh, you forgot to file your taxes. So avoid that, file those $0 returns if they ever come up in the course of your business. Also, if you're remitting sales or withholding tax and a couple of other tax types, this applies to you too. In the state of Indiana, you are required to do so electronically. We make exceptions for our Amish businesses, but most businesses are required to do so electronically. So here are some ways that you can do that. First of all, we would highly recommend you use our online filing and payment portals. A third party won't get involved in it. It is the easiest way to handle this in our personal opinions. So that's why we're promoting this. InTime is our brand new filing and payment online portal. You can use this, as I said, to file and pay, but also to correspond with us, to securely message us, and to do a lot of other things. This has come about because we are modernizing our whole tax system. And because of that, we're taking our old e-portals, and we are transferring all the functionality to this new one in time. That's a really big project. So as you can see, I've included a timeline of this project, and it's taking place over 4 years. So 2 tax types have already moved over to in time. That means if you are involved in filing or paying corporate tax types or any kind of business tax types like sales or withholding, you will do that on in time. Individual taxes and special taxes, those will move over to in time in the next 2 years. So here's a full list of every tax type that is available on in time. You'll notice sales and withholding are on there, but there are lots of others as well. If you're involved with any of those, in time is the best way to file and pay for those taxes. You can also use in time to change your business location if you need to do that with us, to set up to pay corporate income obligations, to set up and manage payment plans. There's secure online customer service messaging on in time. It's a really useful portal. I did mention we have old e-portals. So this is one of them. It's called InTax. We moved all of our business payment or all of our business taxes from this e-portal to our new one, in time. But there are a couple of taxes that are still on InTax. So these are considered special taxes. So they will move over in 2022. In the meantime, if you are involved in filing and paying any of these taxes, you're going to do so on InTax. There are also just a handful of tax types that aren't currently available to pay online in any way. If one of those applies to you, like if you check the handbook and there's one of those tax types that I mentioned on that earlier slide that doesn't have e-filing and payment functionality, all you would do is you would go to our website, you would find the appropriate form, fill it out, and mail it to us. Also, if you decide not to use InTime or InTax, you could use a third-party vendor. For example, a lot of businesses use ADP or QuickBooks, and both of those have functionality that will allow you to remit your taxes through those platforms. Additionally, like I mentioned before, you could hire a tax professional to do this for you. No shame in that. And then the last e-portal I wanted to mention is DoorPay. This is for individual taxes. So anything you're reporting on your IT-40 series of forms. If you have an individual bill payment, estimated payment, extension payment, or you're just filling out your IT-40 in April and it turns out that you owe money, you can make that payment through DoorPay. Just one more time, wanted to also mention, please file and pay your taxes on time. It is important to do that. If you do not, we will let you know and give you many opportunities to correct that. But at a certain point, if you don't reply to those letters we send you, you can enter into our collections process. And if you get into the later stages of that collections process, it can have some pretty rough impacts on you. It could hurt your credit score. You could be issued a sheriff's tax warrant. You could be referred to a collection agency, and it can impact your RRMC. So you remember we mentioned registered retail merchant certificates at the beginning of this presentation. It will not be automatically renewed during that 2-year period when we look at your records and see if you're up to date on your taxes. If you are, it will be automatically renewed. But if you're not, if you owe, it can become revoked. That would be rough for you because you wouldn't be allowed to perform the specific transaction type that got you in trouble until the situation was resolved. Please don't let it get to that stage. The best way to avoid that is to file and remit all your taxes on time. And if for any reason you cannot remit by the due date the full amount of tax owed, please call us. You might be able to set up a payment plan. That is better than the alternatives, definitely. Before we wrap up, just wanted to mention a couple of resources that might be useful for you. On our website, please consider maybe bookmarking some of these links. The New and Small Business Education Center is just what it sounds like, a good place to find resources if you are just starting your business. The Tax Library, that is where the departmental notice and informational bulletin that I mentioned earlier, that's where they live. And there are dozens more of those on all types of subjects. So if you ever want to do some serious research into a particular area, check and see if there is an informational bulletin or a departmental notice on it, and you could find some good information there. We also have a business tax page that is for all businesses, big and small, has a lot of useful links, including those different county tax rates, different business forms, and business frequently asked questions. And I just wanted to link to the handbook one more time. And I mentioned earlier that you should stay up to date just in case anything changes. Here's how to do that. If you go to our homepage, scroll all the way to the bottom until you see a blue box that says subscribe to your email updates. You can be notified whenever we update an informational bulletin or certain pages on our website, or whenever we put out any new information that would pertain to businesses. You can get notified by following those steps. Also, please remember, if you have questions about anything at the federal level, visit the IRS website. The first link on here goes to a small business and self-employed section of their website. It's really helpful. I'd highly recommend checking there if you have federal questions. And also remember, our presentation today was focused on Indiana. If you want to find out how state taxes work in other states, the IRS has one more helpful part of their website. This has a link to each state, and in it, it goes to the revenue agency for each state, as well as other links that might be helpful for anybody who's doing business in those states. And of course, your local SCORE chapter is also a fantastic resource. Please do not hesitate to contact us if you have any questions. I've listed here, you can call, email, or message us. The business tax phone line is on here. We also have an online portal to submit questions about your account in case you don't want to call, or you can directly email our business tax assistance team. And if you have an in-time account, like I said, you can send a secure message through that. We have a dedicated team that just does customer service in that in-time website. So that might be one of the fastest and easiest ways to contact us. And not as many people know about it. So there's my tip for you. You can also, we have a lot more phone numbers and PO boxes and other things like that. So if you have a very specific thing you're looking for, maybe check out the website. It listed at the bottom. That lists out a lot of those specific phone numbers and email addresses for certain kinds of questions. Okay, that is it for the presentation. So
Nancy, thank you. That was great. Very
questions.
Complete and enthusiastic. I've been watching the questions, and Angelina's fingers are probably really sore from answering them. She's
25 answered questions. Way to go.
Yeah, that's great. But that ends the presentation, but we do have a good 10, 12 minutes left for questions and answers. And I thought a lot of these questions got answered one-on-one, but there's a few that I pulled out that maybe you could just answer out loud because the whole group would be interested. And sure. One of them involves InBiz itself. And this is just a point that I'm making, but I could tell that some of the people had the same thought. InBiz is a combined website for the Secretary of State, the Department of Revenue, and who knows who else. It hasn't been around for all that long. And when I used to tell people to go register for an LLC, I'd send them to the Secretary of State's office. They don't do that anymore, right?
So my understanding is if you go to the Secretary of State's office and you just say, I want to register my LLC, they will default send you to INBIZ.
Exactly. So which is fine.
You can still call them, if you have specific questions, they're probably a lot more likely to help you rather than to just send you there. So I'd recommend maybe trying to register on INBIZ. And if you're having problems or you're thinking you have a specific situation there might be an issue with, yes, the Secretary of State is still there to help. Absolutely.
And I think the other thing that some people are confused about is when you go to INBIZ, you can't just look around. You have to actually log in. And yet, but logging in doesn't really mean that you're committing to anything. It's just like, I guess they just don't want people looking around who are not serious. I don't know why, but that's
sure why either. But yes, you're right. If you just go to the website, there's not a lot to do unless you say, I'm going to register your business and you start putting in information. You can start putting in information though, and nothing is set in stone until you reach places where it's really like asking you to confirm.
Right. So let me switch to another question. It has to do with the Department of Revenue. When you register for the retail merchant certificate, it asks you questions about when do you think you'll have your first sale, and how much do you think you're going to be selling? I've had score clients who've been kind of over optimistic. They say, I'm going to start next month and I'm going to sell $100,000 a year, but they didn't do anything for the next year. But they heard from the Department of Revenue. It was like, where's your tax return? Do you want to comment on that?
Yeah, so when you fill in those fields, that is kind of your way of announcing at the outset, here's how much I anticipate I will be remitting to you, and here's when I will start. And it might not seem intuitive to you, but what it's doing on our end is it's letting us know, here's when we have to start assuming you're going to be remitting to us, and here's the amount we're going to expect from you. And if you don't tell us anything, you don't file a $0 return saying, hey, I haven't started yet, just so you know, or you don't do anything with us, we're thinking, well, you said you were going to start by then, so maybe we'll send you an estimated bill. You can still contest that estimated bill if it's incorrect, and if you haven't started your business yet, obviously it's going to be, but it's probably less of a headache for you if you assume this is when I officially start with the Department of Revenue. So you would need to set up like your in-time account and start filing those $0 returns until you begin actually making sales. It is okay for you to do that. You can file those $0 returns for a while, but you just want to let us know that you're not doing anything wrong and failing to remit to us, essentially. Does that make sense?
Yep, that's good. That's good. I know sometimes it's a panic moment. You open up the mail and they say you owe us $5,000 and you haven't even started your business yet. And it's kind of like, who do I call? So a small thing that came through, and this question got answered. A person says, well, I'm an artist. I have to buy paint and canvas. Do I have to pay sales tax on that?
Because you are not, my understanding, and Angelina, please chime in if you think I'm not saying anything correct, but my understanding of that situation would be that what you are buying are materials. You are going to turn those materials into a product, but you are not going to take that canvas, do nothing to it, and sell that canvas to an end product or to an end consumer. So you shouldn't be claiming an exemption on those things. You shouldn't be using an exemption certificate to buy those things. Rather, when you're buying your materials that you'll use in the course of your business, the same as if you were a tailor buying a sewing machine or something, you'd pay sales tax on that. And then when you sell that product using those materials, you'll be required to collect and remit sales tax on those things and remit it back to us. Does that make sense? And both Angelina and Bill can let me know if that makes sense.
Can you hear me?
Yeah.
I didn't hear the entire question, but I was thinking, was that the question about the artists?
Yes.
And the supplies?
Yes. Mm-hmm.
And I think I heard Nancy saying something that you don't need to have a certificate when you buy the supplies. Is that right?
Would you be buying your supplies using an exemption certificate?
If you are exempt. If you're
exempt.
Yes, if you're exempt, then you are required. Yes, you have to present that exemption certificate ST105 at all times. We need that.
Right, but I don't think this person earns an exemption, unless I'm misunderstanding the situation. But if you're an artist and you are buying supplies so that you can produce paintings, there's nothing about those products that are automatically exempt. And there's nothing about your business, because you're not like a nonprofit or government entity or anything like that, that would make you automatically exempt, correct?
Right. Right.
Okay.
Any product that you buy, yes, you will be assessed the sales tax, however, or you will be charged the sales tax. Now, yes, if you are going to use it for something and you believe you are not supposed to be exempt from the sales tax, then you need to present an exemption certificate.
Yes. So
to the vendor, yes.
You can look at that exemption certificate and you can see a list of possible reasons you could use it. And if you think that applies to me, then go ahead and submit the exemption certificate, fill it out and give it to the person you're buying from. But if you look at that list and you think, oh, none of these apply to me, then you shouldn't be using that exemption certificate.
Correct.
Yeah.
Okay.
Okay.
So we're on the same page.
with a couple minutes to go, I would ask Angelina if she answered any questions that she might want to share with the whole group, because maybe it applies wider or bigger. And don't forget to unmute your microphone. So I can't hear Angelina, so.
I'm here. I still have 3 questions here unanswered.
Well, we won't cut you off. You can answer those. We won't shut it down. But before we kind of tell everybody that we're officially over here, is there anything that you answered that you thought you should share with the whole group?
Okay, hold on for a second. Let me just check real quick. One question is if they're going to receive a copy of the presentation.
Yes, they will. It will come to them attached to an email. It'll come in 3 or 4 days. We have to do a little editing on the video, but be patient and you'll get a copy of the slides and a link to the presentation. So you could have the slides and you could also watch this again if this really fascinated you.
Okay, yeah. There's another question here that says, I filed and received my retail merchant certificate, and one of the questions asked was, when will I make my first sale? I put February and I know that I will not be ready to sell anything. Will that be a problem? So my answer is, once you're registered for the sales tax with the Department of Revenue, then if your filing frequency is monthly or annually, then you better start filing those sales tax returns. Otherwise, the department will assess you for the non-filing.
Yep, that was the question I kind of generalized at the very beginning.
Yeah, if there's no sale, then you have to file a 0 return.
Right, right. So, Angelina, just keep working the Q&As until you're done. We don't want to deprive anybody. But for the rest of the participants who don't have a Q&A hanging out there, we're done.
Oh, wait a minute. There's another one here that I do not know what that is. And it says something like about compliance service poster. Do you know that? Does anybody know compliance service poster?
I received a letter via the mail, that one. Let me read it. Oh, I think a compliance service poster that has workers' comp information. I'm not sure that the Indiana Department of Revenue handles that. I think the Department of Workforce Development handles it. If we handle it, I'm so sorry. I wasn't aware that we did that. But perhaps you might want to reach out to the Department of Workforce Development. Angelina, would you have any different kind of response to that? That is my gut instinct on, we don't handle that to my knowledge.
Isn't that the poster where they put up and they show the minimum wage and all of that sort of thing? That's not coming out of the Department of Revenue.
Yeah, that's what it sounds like to me. I might have misunderstood the question, and I'm sorry if I did. But I would check with the Department of Workforce Development.
Workforce, yeah. I would say the Department of Workforce also.
There's a question, is there anything different between online businesses and brick and mortar businesses with respect to sales tax?
You'll generally be responsible for collecting and remitting sales tax for whether you are a brick and mortar store or online. There are some things that might come into play if perhaps you do not own the online store, but rather you are selling through Amazon or through Etsy. Those are technically considered marketplace facilitators. So those entities are actually responsible for collecting and remitting the sales tax on your behalf. So if you were selling online through one of those established platforms that is like Amazon, that might be a difference. Otherwise, none immediately come to mind. That doesn't mean there aren't differences, but probably not any very obvious ones to me. Angelina, let me know if you wanted to add anything to that.
No, I'm good with that.
Okay, I will click on that one that we answered it live.
All right. So we're down to just a couple questions and then we'll officially log off here.
Unless, yeah, well, she has a question here and I don't believe we do follow. Is Indiana following the federal government for given PPP loans are not considered income for 2020 and expenses paid are still recognized on the return? I do not think we do follow federal rules and regulations. We are separate from them.
Yeah, I don't think we're following it either. There is a page on our website. I'm going to stop sharing so that I can find that. There's a page on our website that has information. It has a huge frequently asked questions section about COVID-19 questions because a lot of people have questions like that. So I'm going to find that. I'm going to link it to you in response to that question. And I believe there is a question with an answer that is exactly what you're asking. So just in case you want more information, that's there for you. And for coronavirus information.
There's only one question left. Do I need a certificate to sell popcorn?
I don't think so. I was thinking about that. I don't believe so. That's not tangible personal property, so no.
Wait, popcorn wouldn't be tangible personal property?
That's not tangible person.
Well, it's food. right?
Well, I'm thinking about that as well. I don't know how I'm thrown up in that.
I mean, there are specific rules about what food is considered exempt versus what food is considered taxable. And admittedly, I don't know what caramel popcorn would fall into. I suppose it depends if it's being sold by... Yeah, it's sold in an unheated state. It's sold by weight or volume. It's sold without utensils. My guess would be that caramel popcorn is tangible personal property, but it's one of those food items that is exempt. That's my guess.
Why don't we wrap up by using that as an example? Let's say that someone has a question like that tomorrow. Is there a question and answer box they can send to at the Department of Revenue, or a chat line, or something like that?
Yes, the contact us page would be the best. So here, I will put that up in just a second, but I linked in, yeah, I linked in my slides at one point, there we go, the bulletin that explains those rules for food and beverages. So I'm going to link that bulletin.
Yeah, if it's groceries, I'm thinking groceries.
Yeah, okay. And then I will share my screen in order to put up the contact information again. So here we go. So if you have business tax questions, you can call us. You can email the business tax assistance email address. There is also a portal on that third bullet point, the thing that says door.in.gov/3392. That is the part of our website where you can submit a question and we will get back to you. I will tell you, I don't think that you'll get an immediate response to it. I think it will take a few days, but you will hear back from us. And if you have an InTime account, you can ask questions through InTime. Those are all good ways to reach out to our customer service team on any specific business tax questions you have.
All right. Well, why don't we stop here? We're answered 99% of the questions. It was a fantastic presentation. I appreciate the Department of Revenue reaching out to small business, and we had an excellent turnout for this webinar, so obviously there was a demand here. So thank you, Nancy. Thank you, Angelina. And I am going to click the button, and this will terminate our webinar. Thanks, everyone.
Thank you, Bill.
Bye.
Bye.